Hello, everybody. This is Mark Lynn with Healthcare Business Specialist in Chattanooga, Tennessee. You are now at the Provider Relief Funds reporting requirements for RHCs. That's a mouthful there, but it is done by a Healthcare Business Specialist. It is sponsored by Azalea Health in ChartSpan, and this is being recorded on October the 8th, 2020 at 1 p.m. Eastern, noon Central Time. The information we hope is as accurate as possible as of this time, but it is what it is as far as what we're going to be presenting to you. There's my contact information if you need to get a hold of me. Danny Gilbert will be running the sideboard over here, so if you have technical questions or if you want to ask questions, Danny will be over there to sort of accumulate those for us. We will not have the normal question and answer session at the end because we have about 45 minutes of material, and I'm afraid that the answers that I would give you would be we don't know yet. So we're sort of gonna wait, and we'll save those questions and answers. One of our panelists here, Jeff Brumschreiber from Green Bay, has a session next week about questions and answers at Whipley, so we'll let them do that next week. We'll save the hard stuff for Jeff, but we do have Charles James on as a panelist as well, so Charles can speak up as we go through and tell us. Charles, you want to say something about you and your organization before we move on?
Thank you. Thanks for having me today. And we kind of jumped on at the last minute. I'm Charles James. I'm with North American. We're a rural health clinic, RCM consulting company. We do a lot of FQHC and RHC work, and I'm deeply involved. I'm the president of NARHC right now, and so that's exciting. So we're down deep on many of these issues. So I'm here to learn as well as much as everyone. It's a complicated topic, which, yeah, just like Mark said, I think we all have a lot of, I'm not quite sure. I need to absorb this detail. So thanks, Mark.
Thank you, Charles. Okay, and then we have Jeff Brumschreiber from Whipley. And Jeff, you want to introduce yourselves, tell us a little bit about your CPA firm and, of course, about the Packers. So go ahead.
Boy, we don't have enough time, Mark. I'm Jeff Brumschreiber. I work out of our Green Bay, Wisconsin office, hence the link to the Green Bay Packers, which are 4-0, by the way. I have worked in the rural health clinic area for about 25 years, and our firm covers really the entire nation. We've got about 52 offices throughout the country. We've got individuals who specialize in rural healthcare and rural health clinics and FQHCs and located throughout the country as well. I'm also here to learn and have done a fair amount of research on this topic, but hopefully I can add some value to this presentation. And Mark, thanks for the invite. Appreciate it.
Okay. No, and Jeff, you're selling yourself short on the number of years you've been doing RHCs, because I remember meeting you in 1993 at the first NARHC meeting, and I just did the math in my head. That was 27 years ago.
So, oh yeah, and actually, I probably need to update that in my mental. Thanks for correcting me, Mark.
No problem. Hey, we are both. We've been around this thing.
Still living in the 90s.
Yeah.
Charles is the baby. So, okay, well, let's go on. Let's do thank our sponsors for Azalea. If you are needing computer software, EHR, RHC billing, they sponsor this. They pay us a little bit of money to help us do this for free for you guys. So you don't want to charge you anything. So it helps us with the bandwidth. If you haven't joined the Rural Health Clinic Information Exchange Group, please do so. We have about 1,900 members at this time, especially doubled from a few months ago. And there's where we post information about webinars, seminars, and it's not just healthcare business specialist stuff. If Jeff wants to post stuff about stuff, in fact, I do post stuff from their webinars and from Charles's webinars and Patty Harper and Julie Quinn. Everybody's welcome to use it to get information out. It's very agnostic as far as who's using it. We just want everybody to get the information they need to operate the rural health clinic as easily as possible. We do advertise a little bit here. So here's the services that we provide. There's a couple of links there where if you want to engage us in services or see what we do, there is our information. You're going to have people that want a recording of this. This is being recorded. If that's a problem for you, please, you're welcome to leave, but we are going to record it, and we're going to have it for other people to watch later on. We will post it to our YouTube channel, and we'll post it to this COVID-19 website as well. And there are some PowerPoint slides and some different Excel files. They're in your handouts section, and they're on our COVID-19 website as well. So if you click on these links here, if you have this presentation in front of you, you will be able to go to this information. Disclaimer, we have tried very hard to be as updated as possible and try to provide you some accurate of information. Unfortunately, a lot of it's going to be, we don't know yet, and we really don't know what HHS and CMS is planning on these provider reporting requirements. They seem very contradictory and going to be very onerous for people to comply with. So hopefully they'll change. It says final on them, but hopefully it will change. Again, if you do have questions, just submit them into the box there. And if you have issues, submit them there, and Danny will be watching those for us. Our agenda of what we're going to look at today, very quickly, about CMS just renewed the public health emergency declaration. If you didn't get to do the NARHC webinar on Tuesday, we're going to tell you very little about what Nathan told us on Tuesday, but we're going to show you how to watch that webinar and get those slides, and maybe Charles can help us a little bit, because I know him being the president of the NARHC, he will know a lot more about that than I do. So when we get to that point, Charles, if you can help us with those. Phase 3, hey, there's some more money out there for us. So phase 3 funding, there's about $20 billion that's going to be headed somebody's way in the near future. And if you want to get your lottery ticket in to get some of that money, now is the time. So we'll tell you about that opportunity. And finally, the big bugaboo, if you do get the money, are you going to be able to hang on to it? And this is the provider relief funding reporting requirements. That's really where we want to spend the majority of our time. My plan is to spend about 45 minutes on this and try to get you guys back out to seeing patients as soon as possible. So first thing we're going to talk about is extension of the public health emergency. That was done on October the 2nd by Secretary Azar. That will extend the PHE up to potentially January 23rd, 2021. They can only extend these by a 3-month period of time. They potentially could say that the pandemic is over before then and shut it down before January 23rd, 2021. I don't think anybody really sees that happening, as it seems to be some locations are getting worse, much worse instead of better. And I know we've got at least one provider that's in the hospital right now, and it doesn't look very good for him. So it sort of scared us off of, we were back doing site visits a few weeks ago, and I think my wife and daughter are about to shut me down on going out to RHCs anymore. So after hearing about our provider that's in really bad shape. So what the PHEs, the waivers, or the declaration of the PHEs will do for us is it will extend all those waivers. There's about 150 pages of waivers for healthcare providers that CMS has provided. There's 6 pages specific to rural health clinics. Here's what they look like. So if you go back to this page here, it will summarize those waivers. I think the purpose of this webinar is not to go through those. It's just to let you know. By now you should know. I mean, we can do telehealth. We can have temporary expansion sites. All of this is not new. It's been around for six months or almost 9 months at this point. So that has been extended. Next agenda topic: mandatory RHC COVID-19 lab reporting requirements. And there was a technical assistance webinar on Tuesday. Nathan Bod did a great job in presenting the information about a new portal that we will have to use to report. It's related to the lab testing money. Every rural health clinic got $49,640.33 or some number very close to that. And that was back in May. That was to be used to provide testing for COVID-19. And all rural health clinics got that. Some of you guys will be able to use it. Some of you will not. But here is the recording. Nathan does a better job explaining this than I ever will. And he took an hour and a half to answer a lot of questions. So I was like, he did a really good job. And he's on vacation this week. He had to go on vacation after that, which I can see why. And what we did was we quickly put together just a little Excel spreadsheet to help you guys start accumulating the information. The key thing is first off, there's some demographic information that you'll just have to enter once. And there's a portal that you go to. It's called RHCCOVIDreporting.com. It's mandatory. All rural health clinics that got that money will need to do this. And the key to this thing is to report the number of tests that you perform throughout your entire TIN, your tax ID number. You want to put the total number by month, and then you need the number of positive tests by month. So the first time around, you're going to get this information basically caught up through September. And then by the end of November, we want you to fill in your October information as well. And then each month go in and update the portal with the results of that, and try to do it by the end of the following month after the month is over. So Charles, do you have anything to say about this? I know you probably had a lot to do with helping get this portal up and going. So actually, more comments?
Excuse me, actually, I didn't. I had almost nothing to do with that. So I have to waive that particular portion off.
Okay.
So
I figured you were just sitting there on the computer, just pulling it all together and going at it. So okay. All right. Jeff, do you have anything on this one as well? Are we so far on target?
Yeah, I think you're on target. What surprised me a little bit was the lack of financial data requested in this reporting, which is good. I mean, it makes the reporting a little more, I think, a little simpler, and certainly it's focused on the outcomes, really, the expansion of testing capabilities. So I thought Nathan did an excellent job on Tuesday, and I would encourage anyone who hadn't participated to listen to the recorded webinar. I thought it was very informative.
Yeah, if only HSS would have done the same thing that Nathan and NARHC did, putting this together, life would be a whole lot simpler and easy for us at this point. So, okay, so let's go into the third piece here about phase 3 funding. Just first off, to give you just a little bit of background. So we all know there's been a bunch of money distributed to providers over the last 9 months or so. There's $175 billion in the provider relief fund as of, and this number is probably a couple weeks old at this point. 106 billion had been dispersed, and this will be, there's 2 general round distributions, actually probably technically a third if you looked at this they don't call it the third one, but this Medicaid CHIP distribution, I believe, was a general distribution. I could be wrong about that, but a rural allocation, this is a targeted distribution that came May the 6th to all the rural health clinics. That was that $103,000 plus 3.6 of your operating expenses. That is a targeted distribution. The reason why I'm emphasizing that is there's different things you can do with a targeted distribution and a general distribution. A general distribution, you can pretty much use it along anybody within the same TIN number. You can pretty much use it, and you may even be able to use it outside the TIN number. I have to double check that and see. But the rural allocation or the targeted funds, those typically have to be for that particular targeted provider within that CCN number, is my understanding of that. I've been getting that question a lot lately because people are trying to move the money around to different places, whether they can move it there or not. And then of course, this RHC testing money that we just talked about, that 225 million, the 49,000 that you got, that money is not a part of these provider relief testing reporting requirements that we're going to talk about just in a minute. So keep that in mind. Here's the general and targeted distributions where they're talking about that, and they're announcing this third, what they call phase 3 distribution. HHS is telling people you need to apply. Even if you've already received funds, you need to apply for this, because what they're going to do is they're going to take about 3 or 4 different provider groups that have been overlooked, that have not received at least 2% of their net revenues from one of the tax years. They're going to make them whole. And so, for example, it takes $5 billion to make all the people that have been left off whole. They're going to have $15 billion left in the fund, and they're going to distribute that to anybody else that's applied. You have to apply by November the 6th. Your portal is open right now, so you can get on, you can leave this webinar and go get on that portal and start applying for this, because the sooner the better is what they're telling you. They're encouraging you to apply early, is what they're saying here in red. And so you should be eligible for a distribution in the future. Have no idea how much it will be. It will depend on how much money is left over, and it will depend on how they sort of divvy up the winnings or whatever from that. So that's important that you guys do apply for it. Here's just the definitions of the general and target. These are the actual targeted distributions that you have to treat a little differently. And here's for a general distribution, how you can move it around versus targeted distribution. So I know I had a couple people asking about that. So for you guys, there is that information for you guys, and I won't go over it because most of it won't apply to everybody here. Phase 3, general distribution. This is the first page of a PowerPoint presentation that HRSA put out on October the 5th. Here is the website where you can just click on here and you'll get your hands on the 12 pages, and it has a lot of links, a lot of information on how to apply. HRSA put together a great infographic as well. This one pager basically gives you everything you need to know in one spot. And if you click onto this link, this will bring this infographic up, and it will have workable links in there. So if you want to go in and do your step-by-step provider guide, your application instructions, sample application form, and then a general website where you can find general information. And finally, when you're ready to apply, if you click here, the portal is open as we speak. So you can go in and provide that information to them. You only have till November the 6th, 2020 at midnight Eastern time to get this in to be eligible for this. So this is time, it is a time-stamped thing, so you've got to do it. It's urgency for you guys to get out there and do this. And so you should apply. They're gonna have some information you're gonna have to add together. I think you have to break it into quarterly lost revenue. They're going to ask you for some 2019 revenues from the first quarter and the second quarter. They're also going to ask you for revenues from the first quarter of 2020 and the second quarter of 2020 to determine how much money to send to you. So this is from a, let me see here. Yeah, let's see here. Yeah, this is from a HRSA email that came out on a few days ago. If you click on this tiny URL, this will actually take you to the email that they sent out to everybody that's on their listserv. And so I got this, I guess it was yesterday or the day before, and this tells you what you need to do. And this just gives you here's the actual portal, where if you don't see it anywhere else and you can't find your way to it, this is the actual portal for the Phase 3 funding application, and then there's the general information if you need that. And you're going to have questions, like we said here. There's a question and answer session on October the 15th at 3 p.m. If you click down here, you'll actually register. You can register for it. I'm registered for it, so we will be there to find out, try to find out some answers to questions related to that. Here is a 12-page instructions that they've provided for us on how to complete the portal. Basically, you'll click on here and that will give you your 12 pages of rules. Here is a form. This is the actual form that you guys can use to fill out ahead of time before you go to the portal, because some of this stuff will take some time. You see here your operating revenues from patient care and your operating expenses for this period of time as well. You're going to have to pull this information out. This will not be easy. It will take some time to pull this information together. And then once you get that done, once you get in the portal, there's a place where you can actually click into this link here, and it's going to bring up an Excel spreadsheet type of thing that you're going to have to complete as well. So make sure you do those supporting documents to prove these numbers. Make sure you put a good banking and routing, because you do not want them to lose this money. So make sure you get a current banking information with them as well. So this is the application form that you guys will need to fill out. And once you get in the portal, I know we've already had several people get in the portal. They've tried to, and what happens is they get to the second step and it's validated. It says they put in their tax ID number, and it sort of slows down and says it's not recognized, and they're going to have to validate it, and they can't really get much further than that. And people have been asking me, is that a common thing? Apparently it is, because it's in the slide presentations that if they have an unrecognized tax ID number, they're going to have to go through this validation step. It's going to take 7 to 10 days. So another reason to start early, because if they have to validate your TIN number and you started on November the 5th, well, you're out of luck already. So that's pretty much all I know about the phase 3 application. Charles or Jeff, do you guys have anything to add to what I've said?
No, I really don't, Mark.
Okay.
Yep, and Mark, the only thing I would add is in the HHS Provider Relief Fund frequently asked question, or FAQ document, there is a whole section on phase 3 as well, and it does include some good definitions, and so if you've got questions, that's another resource to go to.
Okay, yeah, thanks, Jeff. I completely left that off. And that is one good thing, is there are FAQs all over the place. HHS and HRSA have put together a ton of FAQs. The only thing I don't like about them is they change them, and you got to watch the dates on the day they're updated, because they're all together. And then I wish they would just give us a list of updated FAQs instead of changing them sort of piecemeal as you go through. But
yeah, I think there's about 7 pages of phase 3 FAQs in there that were updated on Monday, on the 5th of October. So
okay, good.
Good information. So
yeah, that's great information, and I did not know that. So that's very good. I didn't know that about that one. Okay.
You know, Mark, if I could just, I guess
Yeah,
the thing I would add that and I don't know if we'll address it, I'll keep it short. I talked to so many people and facilities that are afraid of the money they've gotten, and I think would be, I think many would be afraid to apply for more. And I guess the one thing I want to say is I would not be afraid of applying for the funds. I think this is not over. I would not, I've talked to many who are rushed to return funds. And then I've talked to some that say, oh, wait, how can I get that back? You cannot. So I would take this very seriously. I would not be afraid of the money. This appears to be for revenue losses related to COVID or items that have not been reimbursed. Man, that's a vague term. But I think this is one instance that if you use reasonable language to tie it to those things, you will have an ability to keep and use this money. And if anything, keep it as a rainy day fund, because it ain't over.
Yep, absolutely. Yeah, the PHE, I can see it being extended for at least another 3 months besides the 3 months that's already been extended, or if not more, because you're absolutely right. And yeah, our recommendation to everybody is go ahead and apply for it, get the money. And if we have to pay it back, well, we have to pay it back. There's still a lot to know about these instructions. We got 6 pages of instructions on the reporting, and they're going to scare you to death. Let me just tell you, they're not. It's the stuff that we're going to present to you is a little bit scary, a lot confusing. And
it's like a State Department travel warning.
Yes.
You'd never go anywhere.
Yes, that's right. That's right. So and I'm like you, Charles. I'm like, let's get the money, let's put it in our bank, and then once we get in our bank, we can figure out what to do with it. If we can't use it, we'll give it back. But it's a lot safer in our bank account than it is somebody else's at this point. So this is the last piece of our webinar today. And of course, in spring 2020, Charles's friend, Secretary or Administrator Verma, she said, we're going to send you guys $30 billion with no strings attached. And if you believe that, I've got some oceanfront property in Arizona, because we have found out there is a lot of strings attached to this money. What's that?
Quantity, just for the record.
Okay, and you did have a really good picture with her, so that's what made me say. But the AMA came out and said just the other day that the AMA estimates that 80% of physician practices will pay back 80% of provider relief funds based upon the most recent guidance, and I got that from PY's webinar. If you go to the 33rd minute of that, you'll hear somebody quote that number. Now, I've tried to verify it through the AMA, but they will not let me into their lobbying section of the website because I'm not a member. So that really concerned me. And if AMA is concerned, the American Hospital Association is extremely concerned with this guidance. We had guidance that was produced on June the 19th that was very favorable. It talked about lost revenues. We could use budgeted numbers. That was sort of the first step in our calculation. The September 19th information or guidance, the 6 pages they sent out, it basically turns the formula on its head. And you start off with expenses, that's your step 1, and then your step 2 is lost revenues, and lost revenues is very, very narrowly defined as basically changes in net revenues from 2019 to 2020. It's basically sounds like a way to where no rural health clinic or no healthcare provider can basically make more money in 2020 when you add in the provider relief funds than they did in 2019. And the problem with that is, okay, that sounds good. We get a floor, but the problem, a part of that is healthcare provider, you can only allow salaries up to $197,300 in those calculations. So physicians and even some nurse practitioners make more than $197,300. Some PAs make more than that. That money can't be claimed in your expenses, and so basically they're going to put you in a worse financial position at the end of this than you were before with the numbers that they're giving us. And so some of there's real concern is, here's from the AHA, it's like they looked at 3 different hospitals. One was going to pay back 16 million of the 20 million they received. Another got 65 million over 10 hospitals. They would have to return 20 million of it. And then one poor hospital, they're having to return 3.9 million out of 4.5 million dollars, 90% of the funds they're having to return. So that's pretty draconian as far as of what's going to happen with these particular regulations as they've been issued. People have been writing. I know all of the lobbying organizations have been lobbying for them to rescind those regulations. I wish we had Nathan or Bill on to see what they think about this. Charles, have you had any conversations with Nathan or Bill to see what NARHC is thinking about as far as these rules?
Well, I guess on this one, I'm not sure what the basis of the return of these were. Of course, we've been heavily focused on the rural health clinic side of these, and you know, having just said, well, I think you should go ahead and take the money. Of course, these fly in the face of that. So no, we haven't had conversations specifically about these hospital returns. We have not seen the same thing on the rural health clinic side of things, but as you say, yes, situation is evolving, and I would just have to question on some of these. This letter said that, you know, of course, the operating on thin margins, we were given the money for a reason, et cetera. So I just have to know the reason behind what some of these funds were returned to.
Yeah,
You know,
Jeff,
be
have you
able to
guys?
speak in more detail about it, really.
Yeah, Jeff, from the Whipley side of things, I know you guys do a great job on the benchmarking reports that every hospital, if you're a member of the NRHC, they provide it for free. And I always recommend, as a part of your program evaluation, is get one of those benchmarking reports on your cost report. So you all got this huge data file at Whipley already. Have y'all had a chance to take a look at these rules and sort of apply them to some of the cost reports and see, are we in the same boat as the hospitals and the physician practices are, or is it just too early for that?
Mark, I think it's a little early for that. We've done some preliminary calculations for different provider types, and it does vary by provider type, hospitals versus skilled nursing facilities versus rural health clinics or FQHCs. But really, it's all speculation. You know, what came out was guidance around reporting requirements, not necessarily the calculation behind the computation of whether or not you can keep the funds. So there's still a lot of questions on the reporting requirements, but there's also just pure speculation on how the data reported will be used in determining whether or not providers can keep the funds. So I think it's a bit of a stretch to arrive at a conclusion on specific dollars. And but I do think that there are some providers that are at risk simply because they've performed financially as well or better in 2020 than they did in 2019 without inclusion of the HHS funds, when you fold in especially the PPP loan forgiveness. So when you have that situation, I think there is some risk there, certainly.
Yeah, yeah.
Well, and on that topic, Jeff, as always, makes a good point. At the association level, our heavy focus was making sure that these funds were not used as cost reporting offsets. So that was our focus on the rural health clinic piece, because had we offset cost with these relief funds, we would have had a huge problem. So that's been our primary focus, which we seem to have achieved.
Mm-hmm. Yeah.
So
yeah, that was been fantastic. I mean, CMS has put that out, I guess, is about a month or so ago, that we would not have to offset that. So that was a fantastic win. Otherwise, we'd be in real bad shape come May 31st when the cost reports come in. So, all right, let's move on. I guess it says on the 6-page document they do the final reporting requirements, and they've really caused more questions than answers. You can tell from our responses from the panelists today is we don't really know what the answers will be or what the government is going to do with this information. It's very scary, some of the changes of the definitions that they're using and what will happen to it. So I will follow Lucy's advice here. It seems if life seems to have more questions than answers, try to be the one asking the questions. And so we're definitely going to get together and ask a bunch of questions to HHS and CMS. Unfortunately, like I said, that's why we're not going to have a question and answer session today, because I would probably be just giving you dumb looks because we don't have all the answers to this yet. And the NARHA just this morning, this was their listing of questions that they sent out to HHS and to HRSA about these monies and the questions they have. They got about 19 questions, things about building, the depreciation is depreciation allowable expense, cash accrual basis accounting, having to do that. They talk about questions about single audit requirements. I mean, if you got 750,000 or more, you're gonna have to hire a good friend Jeff and their firm or a firm like them to do one of these single audit governmental audits of your funds, even if you're a not-for-profit and you've never had to do those before. So that $750,000 is the threshold for that. So Here's some of the questions that they've asked, and like I said, it just shows how confusing it is. Here is the document that came out on September the 19th. It was basically 6 pages of information. You could break it down into 4 major groups there. One is just basic reporting guidance on the use of funds. The second one was the data elements are going to be included in the report, including demographic information, expenses. They break down expenses into 2 different categories: general and administrative expenses and healthcare related expenses. So those are the 2 general areas. If you have less than $500,000 of provider relief funds, you just have to give them those 2 numbers there. You don't have to break it down into detail. If you get 500,000 or more in funds, then you are going to have to provide much more detail to them regarding expenses. Also, there's a calculation for lost revenues, which again is much more narrow in definition than it was in the June 19th data. And they're also going to ask you for a bunch of non-financial data as well that you must collect quarterly for 2019 and 2020. This is going to be a lot of work. I know at one time I was thinking, oh yeah, we'll help our clients out. We'll charge a little bit of money and we'll do the portal for them whenever we have to get the information ready for the cost report anyway. We'll be gathering this. After looking at this, you're going to need the resources of somebody like Whipley, or get Jeff and his group to help you, or accounting firm that you're working with, because this is a lot of information, and this information is actually due for 2020 information. Is you have to have that in the portal by February the 15th, 2021. That seems like, I know when you're doing year-end stuff, you're getting 1099s done, you're getting W-3s done, you're getting your W-2s out to your employees, you're trying to get your financial stuff together, and then to have to put all the information they're asking for to be submitted in this portal by February the 15th. That sounds almost impossible to me. So we'll talk more about that as we go along. But here's the website for this information as well, so you can click into that to get these documents here. Some of the major takeaways from this, and it does feel sort of like a 3-card Monte scheme where the money's in front of you and then the money is gone. So the biggest takeaways are that HHS changed the rules as they reported on June 19th. The rules were relatively favorable. What we saw on June 19th, they seem to have taken a dark side, a turn for the dark since then. It's going to be much more difficult for providers to hang on to these provider relief funds. That's what everybody has come to the conclusion from what we speculate what these rules mean. If you can sort of read between the lines of what they're trying to do, and basically it sounds like they're going to try to recoup a portion of this money. Expenses before, lost revenue was sort of the starting point in your calculation. You sort of figured out how much less revenue you thought, well, you had a budget that said you were going to grow these numbers, but you didn't grow. You actually went down by 60% or 70% in some months. And so that was your lost revenue was your starting point. The new starting point will be your expenses. And we don't know what expenses means. It says, are the expenses incremental expenses just related to COVID, like, your infection control, your PPE, all the different things you've had to do, retrofitting of your buildings and canopies and all this sort of stuff? Is that incremental cost, or does it mean the definition there says expenses to maintain healthcare capacity? And that, if you use that definition, that would pretty much mean every expense that you have would qualify. So those are some of the definitions that we don't know, that will change dramatically what the answers are that we have. So and then what it says in here is that RHCs basically cannot make any more money in 2020 than they did in 2019 due to provider relief funds. Any excess over that would have to be paid back to the government, is the way they read. That's the way these 6 pages read to us right now. If your RHC actually lost money in 2019, then you can use your provider relief funds to get you up to a break-even point, but no higher than that. So again, that's a big concern on how are they going to compute sort of break-evens and and how much money you made and how much you lost. Those are still definitions that I've yet to see. And then capital expenditures can be counted as expenses. From everything we've read, it looks like those if you had to do a new building in order to take care of COVID patients, or that new canopy and bought new equipment to do lab testing, all those sort of capital expenses, they can be considered expensive. And Jeff and I are both CPAs, and Danny's a CPA, so we sort of get, when you start saying capital expenditure versus expense, we sort of get too much in our CPA brain and accounting brain, and don't want to count that capital expenditure as an expense we can include. But my understanding is you can include that. So here's some wise words from Jeff. He just sent me this email earlier today, and I think he said this earlier, but talking about many provide, and he had listened to a couple webinars. Everybody was saying in the webinars that he's listening to is that providers should anticipate they will no longer qualify to retain all the funds. And then this sort of puts us in a catch-22, because like Charles said, is we want to get the funds in our hands. In order to get credit for it, we have to spend these funds, and we will have a taxable event. If you look at the tax rules, this is going to be a taxable event to you guys. And so you need to spend that money in this year to get credit for it. But the way these calculations work in 2021, we may be paying that money back, and we're basically going to create a tax liability in 2020, and then we're going to have some type of payback in 2021. How are we going to report that on our taxes? So that's going to cause us even more concern at that point. So no need to panic, and I don't want to cause you guys to panic. And hang on. I mean, we're in a catch-22. Do we hang on to that cash because we may have to pay it back, or do we spend it so we can get credit for it? Jeff, I'm stealing your words here for us. So you want to give us some context of where we are?
Well, I think what I wrote there, it pretty much summarizes it. But I do think that, number one, HHS has changed their position on a number of things, and that is concerning. Which is a surprise, but I think when it comes down to it, it really becomes a needs-based test whether or not to retain the funds. My biggest issue or concern is that providers at this point are looking at as things are today and not perhaps looking a little bit further down the road. In our particular area of the country, in Wisconsin, this pandemic is as bad as it's been right now. We're in the process of opening a field hospital in our state to accept COVID patients, because our hospital, there's no longer room in our hospital beds or hospitals. So there is going to continue to be a need for these funds, and just recognize that having that money in hand is a much better position than not having it at all, is my point.
Yeah.
Well, and if I could chime in on, kind of some of the things that are unspoken here. First of all, we've got an election coming up. A lot is going to depend on this election, really. Of course, if the administration changes, we would anticipate a change in tone from HHS, but that's conjecture. So that's A. B, this is where voices count. So we have to make it known. I have to be candid. I was caught unaware, really, the extent to which these interpretations have taken such a negative turn. At the beginning of this, as you say, in July, we're like, well, this is just going to turn into a grant, and we won't have to pay anything back. And now, of course, we're saying something much different. I still say, get the money. But I also say, make sure your state legislators and your US legislators hear from you on it, regardless of your position. Hey, folks, we got this money. We can't just pay it all back. We have, when you think about some of the cost reporting implications, okay, how about the sole proprietor or LLC who was finally able to pay themselves a little something because they got some relief money because they've been totally underwater since the startup of their clinic. So there's a lot of technicality buried in here that that clearly hasn't been considered or fleshed through by any stretch, but your voices will count, just like the cost report offset consideration. They need to hear from us. Jeff, I love you. Mark, I love you. Legislators don't care what the three of us have to say about it. They don't care. They want to hear from you, the clinic. So please tell them what this does to you and what this means to you. That's my soapbox.
Yeah, absolutely. I think we thought we had the war won, but it seems like the battle is just starting to, yeah, we got the money in our bank account, but now it's sort of a fight to hang on to it. And so absolutely. And the election counts. I mean, we'll see what the positions are after the election is for this. So let's go ahead and go on because we are going to run over an hour if we don't watch out. So reporting requirements, here's where the reporting requirements are produced. Here's the website that you can go to. Just click into it. Notice that the RHC testing distribution, that 49,000, you do not want to include that money or the expenses related to that in these calculations here. That is a completely separate thing. We've already talked about the COVID reporting thing. HRSA did a great job in putting together a very quick sort of infographic for you that sort of summarizes the information on what you need to report. And we'll cover this in a little bit more detail as we go through. Here are the 6 pages of regulations that were published on September the 19th. The second page over here talks about just the basic demographic information. That's going to be very simple for you guys to fill that out. That's not a big deal. The second page, it talks about if if you receive $10,000 to $500,000, then you just have 2 different categories that you need to report in just 2 buckets: general administrative expenses and healthcare related expenses, and you report that to the government. If you received over $500,000 of provider relief funds, and this is from all the different sources that will count towards this general fund distributions and some of those targeted distributions as well, you're going to have to provide more detail. Here's the detail you need for your general administrative expenses, and here's the health expenses as well. And so we've put together an Excel spreadsheet for you. It's actually in your handouts over there. You can just download that Excel spreadsheet. It's not going to be final. It's going to be sort of a draft mode, but it will help you to sort of start pulling your information together. So these are your expenses you're going to have to report. Also, your lost revenue. Here is the definitions that they're giving you. Again, much narrower in scope. It's basically net patient revenues 2019 and 2020 compared by quarter is what they're looking for. And then I think this is the calendar basis we have to report your payer mix. We're going to have to prepare 2019 and 2020. So that's pages 3 and 4, and then pages 5 and 6 of this. They're going to ask you for what are your other sources of income? Did you get that PPP loan? Did you get that emergency disaster loan of, there's like $10,000 that a lot of people got? And did you get any of these other types of fundings for your clinic? Business insurance, even, they want to, if you have any insurance, business insurance against the COVID pandemic, then they want you to put that as a source, and they're going to want to offset it. It's the way I read into it. And then the non-financial stuff, personnel metrics as well, also patient visits. They want you to provide some of this information, change of ownership, if you've had a change of ownership during the year, and then of course the single audit status. You have to report that as well. So those are the requirements. Again, that seems pretty onerous to me of reporting, especially having to do this 45 days after your year end. And so again, here's what we're conjecturing. This is what everybody is saying is going to happen. Is the first thing you're going to do is look at your expenses. That's step 1, and see if that covers, see how your provider relief funds relate to that. If you haven't been able to expend all your provider relief funds on expenses related to COVID-19, then we go into the next step, which is your lost revenue calculation. And we don't really know how they're going to use this calculation to limit your payment or create payback. So Here's some of the data elements. I won't go through those in detail because you can read those just as easily as I can. There's the non-financial elements that you're required to do. I think we've sort of covered those. Here's your key dates that you need to worry about. January 21, 2021, the portal is supposed to open for you guys to be able to submit this data. It has to be in there by February the 15th, 2021. That is your reporting deadline for expenditures that you spent in 2020. If you spent all your money in 2020, you will not have to report again. If you have additional funds, then you are going to have to spend those by June 30, 2021. That's your drop dead date. You've got to clear out that bank account by June 30, 2021, according to these 6 pages of regulations. Again, that seems a little bit early to me because, again, like what Charles and Jeff have said, is this pandemic is nowhere near being over. I know Wisconsin is one of the 7 states where the pandemic is higher now than it's ever been. And so there's states are getting worse and worse. A lot of them are getting worse and worse. So, but according to this, unless they change something, unless we make them change this, we have to expend all these funds by June the 30th. And then by July 31st, you will have to do your final reporting deadline for those funds. So those are the rules here. And I sort of got carried away with putting these together. So there's your portal is open on January the 15th, 2021. There's your reporting deadline, February 21 there. And then funds must be spent by June the 30th, 2021. And then your final reporting deadline, which is on a Saturday. So I don't know if that's going to give us till Monday or not, but as of right now, just assume that it's Saturday, July 31st that's a deadline for you guys to get your final report in. These are as they currently are. Here's the Excel spreadsheet that we put together for you. Again, it's not finalized. It's based on the information that we have. So the first page, the first sheet of your reporting questionnaire is here. You can put this information together so you have it ready when you enter the portal. If you have less than 500,000, then you can simply break down things into two general categories: general administrative expenses and healthcare related expenses. It says attributable to coronavirus. I'm thinking, my question would be, well, in 2019, we had nothing attributable to coronavirus. So are those going to be zeros? And then everything is going to be everything that we spent because we're going to be maintaining our healthcare infrastructure in 2020. So all of our expenses count for COVID. That's one of the questions that we have. I don't know if it's a rational question or not, but it's one that I certainly have in looking at it. And then again, you're going to have to remove salaries that are above 197,300. We've got a lot of hospitals and RHCs that have doctors and nurse practitioners and PAs that make more than that they will have to reduce that expenditure number for the excess over 197,300. So thinking about how I put together a crosswalk in here. One, you can use your cost report to sort of help you to figure out if an expense is medical or G&A. So if you look at your independent cost reports, lines 1 through 39, that will be your medical expenses. So if you're dropping them into your bucket there, that's going to be into your medical bucket. If you look at lines 40 through 74 of your Rural Health Clinic cost report, your independent cost report, facility administrative costs, you're going to drop that into your G&A expenses when you fill out your form. And then lines 76 through 90, that's other RHC and non-reimbursable costs. It's probably 95% of the time it's going to be medical expenses, but in theory it could be G&A. So you have to look at those closely and determine where it goes. So, and I put in a nice picture of a crosswalk at Abbey Road, which I've walked across that. I was nowhere as cool as these guys walking across that road, but I did it. There is the 197,300 for full-time. So there's the FAQ for that, so you know where that number comes from. And here's you guys with 500,000 or more in aggregated payments. We put together the Excel spreadsheet. This will give you a little total here, mortgage and rent for all 4 quarters, but you have to break it down by quarter for 2019 and 2020. You see why the homework assignment is pretty hefty. It's one of these projects where you can't wait to, I know when I was writing English papers, when I was in school 100 years ago, you can't wait to the last night before to turn in your homework, because you're not going to be able to say, well, the dog ate my homework. You may want to wait a little while before you start on this dough, because we need to see if we can change this and get some better, something more reasonable requirements for us to report this, because I think these are pretty unreasonable, if you ask me, for especially small rural RHCs, where we have a hard enough time reporting annual information for cost reports. To try to go through the financials and break all this stuff down by quarter, good luck. And then here's step 2, your lost revenues that we're going to report over here. The calculation for that, again, is pretty narrow. And then here's where you're breaking down your payer mix as well. And then here's your sources of other funds they're asking for. And then here is the non-financial information that they're asking for as well. For rural health clinics, we don't have to worry about patients admitted, all this stuff going down, medical surgical beds, critical care beds, other beds, that's hospital stuff there. But you guys are going to have to figure out how many telehealth visits you have. So if you use that 95 modifier that Charles and I were telling people that you probably ought to include on all of your claims, you're in pretty good shape there. But if you didn't use that 95 modifier, you're going to have to go back and figure out what claims were telehealth and which visits were not. FTEs, you're going to have to go back and figure out what your FTEs are. Also talking about if people have left, been terminated, those sort of things are going to be in this request as well. So again, a ton of information that they're asking for. Finally, if you have a change of ownership, here's what there's questions about that. So that's everything on that. Jeff or Charles, you got anything about the forms that we have to do, or any comments or questions?
Just to reinforce your point, certainly, that for the small independents that don't really have any accounting backup, or paying an accountant hourly is difficult. Yes, this is going to be onerous. So yes, start early, get it done early. I think the earlier you get these in, if you're first, you'll likely get them processed and approved more quickly and probably with fewer problems, as opposed to waiting to the last minute. But yeah, we're going to have to start going through this stuff now and not wait till 2 days before. There'll be a big upcharge.
Absolutely, absolutely. Jeff, you got anything?
No, I don't have anything to add to that. I think they're good comments so far.
Okay, all right, good deal, good deal. This is, and then again, we said earlier, the provider relief funds are taxable, so that's great news, huh? They're taxable. I should have put the slide in there about the cost report. In fact, I had it on my mind and it just slipped my mind. So, and then here's the single audit regulation there. Jeff, you probably know a lot more about those than I do. I guess you guys, do y'all have like a whole governmental accounting division or something that does those single audits there for you guys?
Yes, we do. We've got a whole governmental audit section. Frankly, and gratefully, I'm not part of that section. I'm not an auditor, but I do know that there are a lot of unanswered questions regarding even that requirement. So the 750,000 may be about received, but that typically, if the funds weren't all expended in the same year, and say you received $1 million, but really only expended 300,000 one year, are you subject to the governmental audit requirement? So, or the single audit requirement. So there's still a lot of uncertainty even around that one component as well.
Yeah, the FAQ and the actual regular, the 6 pages, they differ in that interpretation, what you just said. One says one thing, and then this FAQ says another. So what's the right answer? The government is supposed to be giving us these answers. So, and then this is from another firm, a CLA. They're another accounting firm. If you are going to have to go through this single audit process, here's some considerations for you guys to consider. So, we're running up on the hour, so we'll basically leave you with some homework. There's another webinar at 3 o'clock today. So if you haven't had enough pain from this webinar, there's CLA is putting together another webinar about about this as well. So I'll be listening to it to try to get more and more information. And of course, Jeff will be able to answer all your questions next week when they have Whipley is having a free 45-minute panel discussion with Q&A. So if you need to know more, I'm sure they'll know more by next week. We probably won't have the whole world figured out by then, but Jeff and his group will be able to help you at that time. So
it's actually the 20th, and based on my calendar, that looks like it's the week after, right?
Okay, sorry.
Yep.
Sorry.
Yeah, so we gave ourselves a little extra time, Mark, to learn from everyone else before we put ours on. So
okay, well, good. So okay, well, we will be there in 2 weeks.
All right.
Tuesday, October 20th. We will be there and with bells on to listen to that. So we're not going to do the normal question and answer because, like I said, you would get this dumb look from us. So we want to thank Charles, thank Jeff, thank Danny for being behind the scenes and keeping this thing going. Thank you guys for being out there and working in the front lines. I know, say a prayer for our providers there, because I know we have some that are in dire health condition, but due to COVID-19. And so it's a sombering thing to talk to a provider one day and then call them back 3 or 4 days later and find out that they're in the hospital, not expected to make it. And that's been happening. So we know that you guys are the heroes. Any final parting words, Charles or Jeff? Do y'all have any final parting words?
Let your legislators hear from you, please.
Okay.
And expect that there will be changes made along the way, because that's been the history so far in any of these programs. So this is not going to be the final, even though it says final.
Yeah, even though it says final, let me wait. Okay. Well, thank you guys. Thanks
Mark,
everybody, and we will talk to you soon as we get more information. Thank you. Bye-bye.